Good morning and happy Wednesday to all our listeners. Today's show is packed with some big market-moving stories, including the U.S. government taking action against a North Korean crypto money laundering network and some exciting news for Ripple enthusiasts.
That's right. The US Treasury Department announced yesterday that it had shut down a North Korean money laundering network that had been converting cryptocurrencies into cash for the country. According to the Office of Foreign Assets Control, or OFAC, a front company in the UAE had been acting as a key player in this operation.
And as part of this crackdown, the U.S. has added the UAE-based front company and 2 Chinese nationals to its sanctions list. This move is just the latest example of the U.S. government's efforts to combat the use of cryptocurrencies for illicit activities. We'll be diving deeper into the implications of this story later in the show.
Switching gears to some more positive news, XRP is having a big week. The price jumped 13% over the last 24 hours, trading at $2.69 as of press time. This surge comes ahead of the launch of Ripple's new stablecoin, Ripple USD or RLUSD, on the XRP network.
That's right. XRP has now seen a 21% price increase over the last 7 days, and it's clear that investors are excited about the potential of Ripple's new stablecoin. It's worth noting, of course, that XRP was launched by the co-founders of Ripple Labs back in 2012, but the company has always maintained that it is not the issuer of the token.
Nevertheless, crypto traders tend to view good news for Ripple Labs as good news for XRP, and it's clear that this stablecoin launch is generating a lot of buzz. We'll be exploring the potential implications of this launch for the broader crypto market later in the show.
And speaking of the broader market, we'll also be taking a closer look at some of the other major themes that are shaping the crypto landscape right now. From regulatory developments to technological advancements, there's always something new and interesting happening in the world of crypto.
That's right. So let's dive in and take a closer look at some of these stories. We'll be discussing the details of the U.S. government's crackdown on North Korean money laundering, the potential of Ripple's new stablecoin, and much more. It's going to be a fascinating conversation, so be sure to stick around.
As we discussed in our previous segment, governments and regulatory bodies worldwide are taking a closer look at the crypto space, with some implementing stricter regulations to combat illicit activities. A recent example of this can be seen in Nigeria, where authorities have arrested nearly 800 individuals in connection with crypto scams.
That's right. According to a report by Reuters, the Nigerian authorities conducted a raid on a building where these individuals allegedly committed crypto scams. It's reported that they would lure victims, mainly from the US and Europe, with romantic offers, only to ask for money to be invested in fake crypto projects.
This is a classic example of a romance scam, where the perpetrators prey on vulnerable individuals and trick them into sending money. It's great to see that the Nigerian authorities are taking proactive steps to tackle this issue and protect investors.
Absolutely. This crackdown is a step in the right direction, and it highlights the importance of regulatory oversight in the crypto space. As the industry continues to grow, it's essential that governments and regulatory bodies work together to prevent illicit activities and protect investors.
Building on what we discussed earlier about market trends, it's interesting to note that Bitcoin is taking a breather after an indecisive Tuesday. The Fed is expected to cut rates on Wednesday, but signals slower easing next year, which could impact the crypto market.
That's right. Bitcoin traded lower, validating the indecision signaled by Tuesday's Doji candle. The Fed is expected to signal 3 rate cuts for 2025, which is 1 less than previously suggested. This could lead to increased selling pressure on Bitcoin and other cryptocurrencies.
It's essential for investors to keep a close eye on these developments, as they can significantly impact the crypto market. The Fed's decision on interest rates can influence investor sentiment and shape the market's direction.
Speaking of investor sentiment, it's worth noting that the crypto market is known for its volatility. Even with the current selling pressure, some analysts believe that Bitcoin could still experience a surge in the coming months. However, it's crucial for investors to remain cautious and do their research before making any investment decisions.
As we continue to monitor the crypto market, it's essential to consider both the short-term and long-term implications of these developments. We'll continue to bring you updates on the latest news and trends in the crypto space.
And we'll be keeping a close eye on the Fed's decision on interest rates and how it affects the crypto market. We'll also be watching for any further developments in Nigeria and other countries as they continue to regulate the crypto space.
And I think it's interesting how our previous discussion on global crypto regulations has been echoed in the latest news. We were just talking about how different countries are approaching the regulation of digital assets, And now we're seeing some real-world examples of that in action.
Absolutely. Building on what we discussed earlier, the US Treasury has just issued sanctions over a North Korean crypto money laundering scheme. According to reports, 2 individuals have been sanctioned for allegedly laundering digital assets to support the Democratic People's Republic of Korea.
This isn't the first time we've seen North Korea linked to crypto money laundering, is it? It seems like the country is really pushing the boundaries of using digital assets for illicit activities.
That's right. The U.S. Treasury's Office of Foreign Assets Control has been cracking down on these kinds of schemes, and it's clear that North Korea is a major player in this space. But what's interesting is that this news comes as other countries are starting to explore the use of digital assets for more legitimate purposes.
Speaking of which, I saw an interesting story out of Europe yesterday. A French lawmaker, Sarah Canafo, is arguing that the EU should create a strategic reserve of Bitcoin. She's saying that this would help protect citizens from inflation and poor economic choices made by governments.
That's a pretty bold proposal, especially coming from a European MP. It's interesting to see how some politicians are starting to view Bitcoin as a hedge against economic uncertainty. And it's not just about the economic benefits. Canafo is also warning against the European Central Bank's plans for a digital euro.
Yeah, she's been pretty vocal about her opposition to the digital euro, hasn't she? It's clear that there's still a lot of debate about the role of central banks in the crypto space.
Definitely, and I think this debate is only going to heat up in the coming months. As we see more countries exploring the use of digital assets, we're going to have to navigate some pretty complex questions about regulation, sovereignty, and the future of money itself.
Well, it's certainly an exciting time to be following the crypto space. We'll continue to keep an eye on these developments and bring you updates as more news breaks.
And in the meantime, we want to hear from you. Do you think a strategic reserve of Bitcoin is a good idea? Should governments be exploring the use of digital assets to protect their citizens? Let us know your thoughts.
Now, I think it's interesting how our previous discussion on the rise of Solana NFTs has taken an exciting turn. Building on what we discussed earlier, Pudgy Penguins just dropped a massive airdrop worth $1.5 billion in Pengu tokens on the Solana network.
That's right, and it seems like this airdrop is going to create quite the buzz in the NFT community. According to the official Pudgy Penguins Twitter account, eligible parties can now claim their Pengu tokens through the provided claim link.
And what's noteworthy here is that the claim page will remain live for 88 days, and any unclaimed Pengu will be locked in the smart contract forever. That's quite an incentive for people to claim their tokens as soon as possible.
Definitely, and for those who experienced issues during the initial claim process, the Pudgy Penguins team has assured that the systems should be good to try claiming again. It's also important to note that if you were only able to claim a portion of your Pengu, you should refresh and try again.
Speaking of innovative NFT projects, have you heard about the new sticker shop that launched on Telegram? It's a collaboration between Open Builders, the team behind Notcoin, and the Dogs Meme Coin community.
That sounds fascinating. From what I understand, this sticker shop will sell limited edition digital sticker packs that can be purchased using Stars, Telegram's native in-app currency, tied to Ton coin. Ton.
Exactly. And what's unique about these stickers is that they're tradable NFT decals on the open network, Ton. Users can share their purchased stickers in chats, making it a fun way to showcase their digital collectibles.
I can see how this would appeal to a younger audience, especially those already familiar with Telegram's sticker ecosystem. It's also a clever way to introduce people to the world of NFTs and cryptocurrency in a more accessible and engaging way.
Absolutely. As we've discussed before, the key to widespread adoption is making crypto and NFTs more user-friendly and appealing to a broader audience. Projects like Sticker Shop and Pudgy Penguins are definitely taking steps in the right direction.
And it's not just about the technology itself, but also about creating a sense of community and fun around it. I think we can expect to see more collaborations like this in the future, where NFTs and crypto intersect with art, fashion, and entertainment.
That's a great point. As we continue to follow the developments in the crypto and NFT space, it's clear that the lines between different industries are blurring. And that's what makes it so exciting to be a part of this ecosystem right now.
As we wrap up today's episode, I want to circle back to our discussion on Fuel's airdrop announcement. A 10% airdrop of their new token supply to 200,000 wallets is certainly a bold move. What are your thoughts on this, and how do you think it will impact the adoption of their Layer 2 network?
I think it's a clever strategy to incentivize users to try out their platform. With a maximum supply of 10 billion tokens and 1 billion being airdropped, it's a significant gesture of goodwill. Plus, their claim of being the fastest and cheapest Ethereum rollup is certainly intriguing. If they can deliver on that promise, it could be a game changer for the Ethereum ecosystem.
That's a great point, and it ties in nicely with our earlier discussion on decentralization. Miles Jennings from A16Z made a compelling argument that digital asset laws should prioritize decentralization standards. How do you think Fuel's approach to decentralization stacks up in this context?
Well, as a layer 2 network built on Ethereum, Fuel is inherently decentralized. By leveraging Ethereum's security and decentralization, Fuel can focus on scalability and usability. Their approach to decentralization seems to align with Jennings' vision, and it's exciting to see projects like Fuel pushing the boundaries of what's possible in the decentralized space.
Absolutely. And it's a timely reminder of why we're fighting for crypto in the first place. As Jennings said, decentralization is key to guarding against volatility, scams, and casino culture. It's a crucial aspect of the crypto industry that we need to protect and promote.
That's right. And as we look to the future, it's clear that decentralization will be a major theme in the crypto space. We'll be keeping a close eye on developments in this area and exploring how projects like Fuel are contributing to the growth of decentralized ecosystems.
So, what are the key takeaways from today's episode? For me, it's the importance of decentralization, the potential of Layer 2 networks like Fuel, and the ongoing need for advocacy and education in the crypto space.
I agree. And from a market perspective, it's clear that the crypto space is still evolving rapidly. We're seeing new innovations, new projects, and new use cases emerging all the time. As we head into the new year, I'm optimistic about the prospects for crypto and excited to see what the future holds.
Well, that's all for today's episode. Thanks for joining us on this journey through the world of crypto. Until next time, stay decentralized.
And don't forget to tune in tomorrow for more crypto news, analysis, and insights. We'll be back with another episode exploring the latest developments in the crypto space.